Good morning, everybody. Happy Tuesday. Welcome back. Let's get started for daily profit plan. Let's go right here. My computer's been running a little slow this morning for some reason, and it's making me a bit annoyed. If you can, I haven't shared my screen yet, but here you go. Let's do screen share. Pulled out a nice, almost full winner yesterday on daily profit play. Even though I didn't get in for the credit that I wanted, we still ended up grabbing. I grabbed 70 cents, closed out for 5 cent debit. Prices were pretty contained. Here is the daily action. Get this out of the way. Get that out of the way. That was the 30 level we needed yesterday. I said the high based on the market maker move would be around 69.20. It's pretty good calculation. Yeah. We had plus minus 30 on the day. We opened right here. Price went up like pretty much exactly 30 points and then faded for the day. So that was your high based on the plus minus. Settled in pretty much where we started, right around the 6,900 handle. We will see what the market gives us for the day. Let's take a look at everything plus minus for today. Positive gamma above 6,900, but room to fall, room to rally. Let's see if we have a gap today. We're just a few points down on futures. So if we're going to roll into this level, this gap, we could be playing around with those areas. So we'll keep an eye on that. Any major news we have this week? I think it's just really Friday. Let's go for this week's news. Let's see here. Tuesday, CPI out of Australia. We have ADP numbers on Wednesday morning. Services PMI on Wednesday morning. JOLTS job openings Wednesday morning. Unemployment claims Thursday. And non-farm Friday forecasted for 62K. And then some U of M news, inflation expectations, consumer sentiment. We've seen that pretty rough for a while. Let's look at the last week's print of AAII. And then NAIIM. And AAIM. Oh boy. So last week's AAII, 42 bullish, 27. Not near historic, not near the 1 year highs. But another kind of big push into the bullish side. This does make me all the more reason to be cautious. It's as far as like if I want to put capital to work, I think going, smart trades, fairly low risk right now. I think the market will give us opportunities that we continue to talk about. If the session I did with Lance yesterday, we just kind of talked about where things could be. We talked about some engineered options, which will be coming out on Sunday, which I'm excited about. But that trade to me, it's like it's not going to cost us a lot of money. We can make it where I could literally participate every single week, and I'm only putting a couple $100 of risk a week at play if I wanted to keep it very, very cost effective. I can go an entire year, lose every week, which is not going to happen, but I could lose every week and only risk about $2,500. That's how small we can make these trades. Now, I intend to win about 65 or 70% of the trades. I also happen to have like some backup plans where we can kind of wash a lot of the weeks that might not cooperate. Case in point, last week's trades that I took on engineered options, the market was down 2% from this recent all-time high, and we still ended up grabbing some net profit on the day. We won the 6,900 level as well as the 6,850 level. So I closed out both those for profit last week, or yesterday actually, because that was the expiration. So Anyway, I think that the best thing moving forward in 2026, what is up with this? I guess my picture isn't loading. Nice. All right. My computer's forgetting a few things this morning. Okay, so we'll get prepped for daily profit plan. Let me log back into my broker platform here. Okay, I'm going to check on a cash position really quickly. Let's do a little top-down spot check. SPX. Sheesh. I do have a question. Let me get the chat up for everybody. Um, we have a VIP event coming in February. Has anybody been contacted for that? I think it's for Diamond Club members or All Access members. It's going to be in person. I'm coming to Jacksonville for our Prosperity Pub HQ. We're hosting a conference. I think Nate and Lance are doing it right now for a session. I'll be there with a couple other gurus. It could be myself and Roger. It could be myself and could be Kane. I'm not really sure who's all doing it today or doing it this week, but we have one through February, and I just confirmed the dates. So February 9th through the 13th that week. So I'll be there for the first couple of days. I wish I could just stay for the whole week, but just a little tight on the 1 year old. So I'm like, yeah, I just what days am I going to be there? What days am I speaking? And I'll just fly in, fly out. But it'd be nice to see everybody in person. So anyway, let me try to find out some more details on if there's seats open, spots open. I'm not sure, but I know it's for like all access, VIP, diamond member stuff like that. But be exciting to hang out for the week and see some people in person. I enjoy doing the live conferences. Uh, Bodine, I like that. Was that on Lost Dog with Tom, or is that like an older interview? One trade ever again. Yeah, and you know how he's going to manage that trade? That let's see if you can see that to everyone. Tom Sosnoff selling a 12 delta naked put, probably on the S&P or the SPY. Go out 45 days, manage it at 21, and he would just repeat that trade over and over. Outlier trading, yeah, yeah. I mean, I can tell you exactly how the trade goes. He goes to 12 delta naked put, 45 days out, manages at 21, doesn't care if it's a winner or loser, and just trades that forever. It's totally not a bad trade. Yep, nice. Let's see here. I managed it at 50% profit, 21 DT. There you go. Yep. Larry, nice work. $1.40 out of 30 cents. That's a great win yesterday. Nice work on that 10 wide. Trump's on today at 2 p.m. Okay. Yeah, 50% in 21 days. Exactly. Yeah, not bad. I mean, what was kind of cool is I know that Tom is no longer with the Tasty Trade network. He moved on to Lost Dog, but inside Tasty Trade, what the heck is going on here? Apparently, I don't have options for SPX. Um, all right. Let me log out, log back in. 2404. Okay, that's the pre-market plus minus. Nice. Let me find that here on. I got think or swim up. So let's go SPX here. This might be a little different, but option chain for today plus minus. I got 2398. So you have 24. All right. Not bad. Now if we're trading around 6,900, take a look at our gamma levels for this morning. I'll update the tracker really quickly. So the ATR tracker tab, we are back at it for took a little breather for the holidays. We're back at it for the 5th. Closed at 6902. And back to first full week of trading. Plus or minus 30 on the day. Price rejected nicely at the high. Almost exactly 30 points. Then rejected and fell for a flat move on the day. The gap up, and we still produced a win for the day as far as like, Friday's closed to Monday's open. We still had a gap, but as far as price action for the day, gap up, and we finished pretty flat for the opening bell to closing bell. So that's do we stay inside the 50% ATRs? No, because of a gap, but we did have a winning day, so that is good. And take a quick screenshot here, just above that 50% ATR. All right. How far is the 12 delta option? You're asking for the expiration there, Arthur? Hey, I mean, look, I'm going to say this. Don't get super excited about a 12 delta, because also there's going to be some rolls in there. There's going to be like it sounds great, but I'm telling you, like naked risk, naked puts. If we have a vol spike to 30 or 40, if we have a liberation day 20% drop, that 12 delta is going to be in a lot of pain. I can promise you an equity curve that looks something like this. Up, 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 up. And if you don't manage that trade, it's going to give a lot of it back. And then you go up, 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 and a lot of it back. So, I mean, that's the only thing I've seen, the classic like tasty trade, 45 DTE, 12 to 15 delta, 12 to 16 delta strangle, same type of thing happens. Big volatility events equal, you got to really understand how to manage through those trades, and you don't want to be overcommitted, right? If you start stacking up multiple 12 delta puts every, week or two or every month, it's like you're gonna have to manage those trades. So I'll show you how far out it is. I don't know why I'm not getting options right now on my broker platform, but let me try to load this back up. Otherwise, I'll look at Thinkorswim this morning. I mean, so when I had the session yesterday with Lance, look, all these moving averages offering some support, but I still think they're going to get found. I think this market's going to start out kind of a little noisy. If we're lucky, the market just kind of drifts higher. Okay. If we get through January and the market's kind of hanging out at all-time highs, we had a similar rollover last year. Let's exclude Liberation Day. Let's exclude tariff talk. Let's exclude the trade war that helped us get down to a 20% correction. I can't help but recognize that the one thing in the U.S. that does have me concerned is just the fact that we are sitting here at these crazy high valuations. Now, I know the market can climb the wall of worry. I know that we can see sentiment lean one way and be super extreme. We can see the market doesn't care about a lot of things until it does. But to me, the better opportunity is just to kind of grind with the market. Don't over risk. I mentioned this yesterday in session. with Lance, and also let me see if I can pull up the screen share from yesterday. Do you remember this image from yesterday? We talked about this, right? So going based on the S&P price to earnings, we're trading like 25 times earnings right now. And historically, between the Cape-Shiller ratio above 40 and 25 times earnings in the S&P, the forward returns like 5 and 10 years are essentially zero. So that doesn't mean that we can't go up. It just means that if we go up, let's say over the next 10 years, we're up at one point, extra 50%. We could also give all of that back. Okay. Um, if I pull out some interesting averages, let me see what this, I think this is a 10-month moving average in green. Let me add one more indicator here. I'm going to hide this one, but let's go exponential. So exponential, and I'm going to make this a 3 period based on a 12-month chart. Let's see what that looks like. Okay. Well, we'd be breaking my 10-month moving average, 10-period monthly moving average, and we'd be breaking the 200-day moving average before we'd hit that. So that's not a crazy reversion. I mean, that's tight, but that's a correction down to 6,000. All right. I'm going to hide that one. That's not really that practical, especially if it's breaking, all my other structure levels. So at these highs, this week's news, let's say that non-farm payroll this week comes in soft. Well, the market's trying to spin, weaker job numbers in the U.S. as a positive catalyst for the Fed to continue to cut rates. The market's already expecting 2 rate cuts for the year. And we'll take a look at that in a moment. Give me my options chain. There we go. Finally. All right. Now I have my option chain 2404. And I need to log back out, log back in. Good Lord. So 2404 for Tuesday. Having some tech fun this morning. I want to go out and find that. Let's find that 12 delta put for you. So let's go 45 days here, Arthur. Just for fun. 44 to 45 days is February 20th. Take the weekly expiration out the AM. More liquidity there. So take weekly expiration. February 20th. Let's go find those strikes. Delta wise, I'm still going down quite a bit. There you go. So we're starting to line up those 12 deltas. 12 deltas around 60, 64.40, 64.45, potentially even down to 64.20. Take a look at that in the chart. So if you did SPY, what's that percentage move? A 12 delta at 64, that is down about 7%, 6.8% or so. So is that a ton of distance? So I mean, in 45 days, it's decent, but I don't know. Here's what I would say. I'm going to take that idea, okay, and I will add, if you want to be a little bit more timely and a little bit more opportunistic, if the VIX is ever in the 20s, then do that trade. And also, rather than doing just a naked put, I would sacrifice maybe a tiny bit of credit, and I would do a ratio spread instead. For Project Options Edge, we have a couple of trades in that are expiring. Log back in. I'm just trying to get the software to not have any weird glitches in it. Sometimes I open up my desktop application for Tasty Trade, and it has like these like black like pixel boxes, and it something's clearly off with that feed. So see if this will correct it. All right, I think we're good. So SPX, I've got a 2404 for today. Got about 4 minutes. We'll have a look. Recented this in at 6902. Let's get some levels. Okay. VIX is trading around 15. I do this chart alarm here at 1528. That would be breaking yesterday's high in the VIX. If we have another push up into like 1542, set a couple of chart alarms that would keep me from like calling the bottom. Okay. Let's see if we have another kind of calm and quiet day before some of the news starts to drop. Tomorrow's really when the news starts to hit as far as US news. This is looking like one of those days where, some flows, we have a plus or minus 24, and even from the open, 25 points gets us to the 68.75. 20 plus points gets us into these gamma levels to the upside. I would expect some direction today. Doesn't mean it has to finish there, but I would expect some movement through the day. So using a lower delta, if I go to like a 10, 11 delta for daily profit play, hopefully trying to get a call trade above 69.30 to 40, trying to get a put trade maybe down to 68.50 or 68.40. If I can go out that far and get my dollar for it, that's probably my play. So I'll say that again. I want to be doing my put side down here, my call side up here, and hopefully I can still get the dollar that I want to keep the risk, $4 to make $1, but increase the probability that we stay within that market maker move of the day. Okay. Thanks for bringing that up, Alan. So I don't have a slot for today. I checked with my fiance and like her schedule in calls today. She has a ton of calls stacked up. So what we're gonna do for waterfall income, I'm gonna sprinkle in a waterfall income masterclass Wednesday at 1 p.m. So Wednesday, 1 p.m. Eastern time will be a masterclass. Okay, I'm gonna put that on my calendar right now. Everybody good with that? It will be recorded. Yep. So if you can't attend live, I'll record it. It'll be popped up in your classroom by Thursday. But Wednesday, the 7th, 1 p.m. Eastern time, waterfall income masterclass. Throw that on the calendar now. And then I will be in closing playbook solo. That'll be our build the trade segment. Okay. High low. Yep, I'll calculate that for the day. All right. So let's use the VIX, which is hanging out around 15 right now. And that 15 is going to give us like a 0.95. So 15 divided by 16, a 0.94. And we're not really going to have a gap this morning. So futures is up about 0.04. We'll have maybe a tiny little gap to the upside. But if we're going 0.94 from the close yesterday, 0.94 is around, oops, that flopped on me here. So let's go 0.94, 96.60 or 69.67. And that's at a 15 VIX. Okay. And then we had a slight gap higher. Let's go from the close yesterday, 0.94, 68.38. Okay, so pretty much using the VIX box in yellow, top and bottom on the day. Let's see what we can get for our lower deltas. So going to 35.40, or the gammas to the upside. Gamma's around 30. Highs here at 45. Let me see if I can do a 40 by 45 this morning. That's a 10 delta and a 65.60. I'd like to go a little bit lower just to be on the safer side. It's like I could see price falling towards 75, um, maybe hanging in above the 50. I'm going to skew this just a tiny bit. So 10 delta call, and let's go 6 delta. It's trading for 55 cents. Let's see. That's only getting me 50 cents. If I go 10 delta here, I'll probably get closer to $1. That's trading for 60 cents right now. That's not much better. So let me put it where I'd like to, which would be the 50 strike. So 68.50. This is trading for 50 cents. I'm going to put this in for $1 and kind of monitor this for the morning. If this gets up to like 85 or 90 cents, I might adjust the trade. I like where I'm putting the trade. So I'm going to go lower deltas. If I can get 75 cents or better on this one, I might take the trade. I'm not going to take it at 50 though. So I'm going to put this in for $1 right now and keep an eye on this one for a better fill and kind of give price a little bit of breathing room. So alerts coming for members in the Telegram chat in about 30 seconds. All right. Today is the 6th. All right. Pending for $1 credit. If I see 75 credit or higher, I may still take the trade with one contract. And keep one contract at $1. Okay. Or if I try the 40 and I'm willing to go 10 wide, if I can get over $1 on a 10 wide, I might just take the trade now. That's 80 cents. So if I'm willing to risk a little bit more, if I ask for $1 here going 10 wide, like this one is a pretty good probability profit to stay out of the way. That would give us about 20-ish. I mean, it's given us 30 points to the upside, and it's given us about 60 points to the downside, plus or minus under 20. Let's see. I don't love risking $900 to make one. Let's see if we can get a little bit of direction and pull this in for like $1.50 or something. I'm gonna set this one at $1.50. So I'll go dollar credit on the 5 wide. I'll keep the same strikes and I'll go 10 wide. Try for $1.50. And all right, adding new trade. $69.40, $69.50, $68.50. Nope. Did I do 50 again? Yeah. Okay, 68.50 put. 68.40 put. $1.50 credit. Pending. Whichever fills first, I'll keep and manage and cancel the other one. All right. So I'm gonna put the trade in for a dollar on the 5 wide, $1.50 on the 10 wide, and if one fills, then I'll cancel the other one. Because most likely the 10 wide will fill a little bit faster, but I'm gonna ask for a little bit more credit than a dollar, so I'd be risking 850 to make 150. And then the goal is hopefully to grab 50 bucks on the day. If things are looking good and it looks pretty quiet today, then trying to grab maybe a dollar 25, $1.30 out of the day. So close it down for like a 25-cent debit or less if it gets filled. So if we get a little bit of direction today, then good. Hopefully we get filled on the 10 wide. 68, 68. No, they're correct. 69.40, 69.50. That's the call spread. 68.50, 68.45 is the put spread. 68.50, 68.40 is the put spread. Those are correct. Are you talking about the high and low? That was correct. 68.38 bottom, 69.67 top based on the VIX. Yep. Let's go. Dynamic trend here. Open up my live web app for GEX. Okay. So today, currently trading at 69.09. Largest gamma levels around 69.30. So if we're staying above 6,900, that is our positive gamma environment. So above that is good. Even a little pullback into that and a bounce is good. 50% ATR. If we go after like 20, 25, or 30 today, that seems pretty gettable. We opened up around 08, so getting to 25 or so should not be unrealistic on the day. Let's see what a butterfly looks like for double up. If I did a 69.20, 10, 20, 30. Bit pricier than I want it to be, but it's not terrible. $1.60. If we go up on the day, we could probably turn that $1.50, $1.60 into some profit. If we get to 25, is that gettable? 25 is a 50% ATR. Gamma at 20, 25 that gets us inside the trap. This might get a little cheaper if we fall back to this 6,900 zone. See if this gets a tiny bit cheaper. 150 is not bad though. I mean, the goal is if I get a debit for $1.50, $1.55, I'm going to try to pull in 50 bucks or 100 bucks or more. If price does end up getting to 69.20 or 25 today, that should be looking pretty good for a win. Do I love that gamma level on the day? Let's see. Something tells me like I might not get filled on my daily profit play. So maybe a run into like 2025 would be catchable. Let's see if we can turn this into a profit. I'm gonna try to get this one for $1.55. This will be a double up trade if this gets filled. $1.55. Max risk $1.60. Come on. All right, I'm in for this is gonna be a double up alert. So I put in a butterfly spread for double ups, and I'm looking to trap here at the 25. So 15 is a buy call, 25 is a sell call, and 35 is a buy call. So this area is going to be my profit trap. Looking to see if I can get a little butterfly action in here. Actually, it'd be more. Well, that's what the trade looks like. It's going to be risk, profit trap, and risk. But if we can get price to bounce off the positive and negative gamma pivot point, hopefully make its way back up. This high from yesterday around 69.20 should give us some profit trap for a couple bucks maybe. So let me set a chart alarm around 20. Post this for double ups. $69.15, $69.25, $69.35, $1.60 debit, 50% ATR, and gamma levels at 69.20 to 69.30 today. Looking for 50% return or better for profit management. So keep an eye on that one for the day. We'll see. Hopefully we're going to be bouncing off in here. If we go a little bit higher on the day, see if we can get up to like 20. If we get 69, 20, 25, I'm going to take some profit. So pending order on daily profit play. Double ups has been filled at $1.60. I'm going to set that one for so double up in at $1.60. I'm going to go ahead and put a close position on at 320 and see if I can get 100%. If I can, great. If it's offering me, if I can get, $75 to $100 out of it, I'll take that too. Okay, let's see where price can get us. So set a chart alarm. Largest gamma of the day, real time, is 69.30. Hopefully we get a little flow to the upside. Set an alert. 25. I mean, if we hit 20, 69.20, that hits yesterday's intraday high. See if we can work our way up and close that on the butterfly spread. And then if I get filled on a daily profit play, my level is 40 and down to 68.50. So just looking to see if price will get us filled on daily profit play, maybe a little nudge to the upside going after this 50% ATR. Here we go. So we're making and this is the good and the bad. If we make a quick run to these highs, it's early enough in the day where let's say that we in the next 45 minutes we're up to 69.20, 69.25. My butterfly spread is going to be profitable. It's just it's not going to be as profitable as it would be if it was like noon or 1 o'clock in the afternoon, or obviously like 3 in the afternoon. So if it happens early in the day, it's still okay because you'll probably of $1.60, you'll probably still see like $30 to $50 in profit. So I'm still interested in just taking it because directionally we're hopefully getting it right. Okay. So far, so good. If we get a little bit more direction to the upside, that should also pull in maybe our credit that we're asking for on the daily profit play that's still pending. So we'll see where price goes. Any updates on the gamma? Still that like 20, 25, 30 level is being highlighted for the morning. Previous all-time highs back here at 45. And plus minus, we opened up around 08 and we're looking at a plus minus 24. So potentially up to like 30, 32 could be our high for the day. As far as like where market makers would keep it efficient, right? Price could get up into the 30s, fall back below 30s, but we'll see what happens. 2025, let's set a couple chart alarms here. we'll see what we get. So right now that double up's already up 50 bucks. That's not bad at all, actually. So that means $1.60 debit I could get out for like 210. I'm not getting any like fluctuation in my prices. So let me see what this is looking like. 215. That's a quick like 50, 60 bucks. Not bad. Not bad at all. Okay, let's see if we can find at least our first little level here around 20. Couple points more. Let's get to 2025 and see what that double up is worth. That's up to 220. If I can grab, if I can get this for 250 or 260, I'd be pretty happy with that trade for the morning. Melinda, it's okay. I mean, we get plenty of these opportunities. We do this stuff every day. Double ups, yeah. I mean, it's yeah. I'll do a little walkthrough here. I might actually start looking at taking some profit really quickly. It's up 70 bucks right now. Oh, 60 bucks right now. Now 70 bucks. Let's see if I can get this thing for like a 230 exit. So at the end of the day, I mean, if it was into the butterfly trap now at 1693, I would be, my break even is going to be 1660. So I'd be up, 40 bucks if this was the end of the day. If we can get up to 20, 25, or I mean, 25 is my pin price. So if we can test this level, that would be good. It's just early in the day where it's like, I'm not going to get full profit out of this thing by any stretch of the imagination. It's going to be, maybe grabbing 50 to 100 bucks. So, well, I think the best way to explain that for the question that Chicago is asking, he's asking, can you explain the double up service? Never heard of it. So I'll go through. I've got a summary sheet on my PDF, or not my PDF, my PowerPoint, I guess. And I'll kind of walk through every service. But the anatomy of a trade segment, it kind of helps explain also like what this strategy is, like what double ups is I trade mostly 0 and 1 day expirations, and I trade primarily butterfly spreads because that is the only strategy that really sets you up for like the highest reward, lowest risk setup. Can I get 225 for this and grab a quick 65 bucks? I mean, dude, the price is up to 19. Let's go. So 220. Come on, man. Give me 60 bucks. All right, just got filled at 220. So I'm already out. I'm taking the win. Double up. Trade management. Note. This is a very quick in and out. Entry $1.60 debit. Closing 220 credit. Taking a quick win as price cooperates and runs to my gamma levels. If you want to manage the winner, let this trade run longer in time and see if price will hang out in the 69.17 to 69.33 area for the butterfly profit trap to fill up. Okay, just got filled for a buck 50 on the 10 wide. Okay. So closed out the butterfly for a win. Got filled on the 10 wide. So I'm going to cancel the 5 wide here. All right, I'm going to cancel the 5 wide. All right. So let me update daily profit play. The 69.40. $69.40 by $69.50 call spread, and the 68.50 68.40 put spread. Looking for a dollar debit or lower to protect profits. You got filled on both, Mike. Okay, I canceled that 5 wide, so I'm only going to stay in the 150. You got filled on both, that's fine. Just manage them. Okay, so we're getting a pop up. I mean, again, that was like an 8 delta getting filled this morning. All right, we had a quick spike up to about 25. Not sure what the butterfly. Right now, this trade for like 215, 220. So, I mean, I exited already. If we hang out here at like 21 for a while, then this is going to fill up in more profit. But I'm happy to take that quick win. Now I've got the 40 by 50. If price stays inside this red zone, which is my expected move, then my daily profit play looks a little bit better for profit as well. So right now it's already up 50 bucks. I mean, honestly, I think I'm just going to take the quick win and see if I can close this for $1. Give me $1. Give me a quick 50 bucks. I know this is moving really fast, by the way. But if price cooperates, we'll see if we can grab a quick 50 cents out of that, and I'll just take the winner on the day and be up 110 bucks. So see what this one looks like. So it's not filled yet. It's up about 30 bucks right now. And if we breach the 40 to 50 zone, um, I'm wondering if I can have like a cost effective like iron fly up here. Let me see something. If I pin this at like 45 or 55, I might play a little defense today. Like playing with $1.50, I can put in a defense trade that hopefully is a bit of a smaller risk. Take this down to like 50 cents debit now. Okay, let me see what I can get for an iron fly. If I went 55, 55, 65, 45. For 40 cents, I can have a 10 wide that gives me a trap up above price. So here's my logic. I'm willing to sacrifice a little bit of the profit. If we stay below 69.40 today, then I'm going to pull in a full $1.50. But if I can do this iron fly and do this for 960, I'm only risking 40 bucks. I could still make 100 bucks on my daily profit play. And then I've got a profit trap that offers me, $900 plus if price is going to be around, 45 to 50 today, 45 to 55 today. That would be a little defense on the upside. I'm going to try to go 960 credit. Maybe 955, sacrifice 45 bucks and go after $1.50 today. What's price doing? Yeah, price is gaining a little bit. Let's take this down to 950. That's chart alarm going off at 25. Okay. That's crazy that Butterfly is not trading for any more profit despite the market being right at my pin price. So I'm glad I got out of that for 220. That's fine, other than hanging on to it longer for the day. All right, here's the deal. It's a lot going on this morning. That's okay. But for daily profit play, DPP, I'm playing defense to the upside with a low risk, high reward iron fly. So I'm doing SPX 1/6 expiration. Um, I am selling the 68.55 call, buying this 69.55 call, and then 69.65 call, selling the 69.55 put and 69.45 put. 950 credit, so 50-cent max risk. Now my $1.50 daily profit play. If it closes for a full winner, gives me $1.50 profit. And this iron fly sacrifices 50 cents. But if price hits 69.45 or 69.50, 69.55 area, the iron fly can help offset risk. Yep, it's in the chat for daily prop play. Yeah, Bill, I know, man. I feel bad. It's moving really quickly. But look, the plan for the day is this. I would like to see price stay less than 69.40. So as long as price stays below this, then I have a $1.50 credit, right? So my yellow line is if we stay below this, I get a $1.50 credit here. If we stay above, I mean, right now it's like we'd have to have a nasty turn if we're going to get back to any put threats here, but we are down to 68.50 for the put side. Okay. So in yellow, that's my daily profit play. If price stays below this, above this, that is my daily profit play. What I'm doing just up above that is I'm putting in a defense trade that is going to capture anything that goes slightly higher than that. Let me put this in a different color. Defense, I'll just use this pink line. So from 45 to 65 in this area, I have a low risk. So low risk, high reward profit trap. So this potentially can give me $9.50 of profit if price is up here, but I'm only risking $50. So the plan for the day is to see, can it stay efficient for the day? Remember the plus minus 24. We've already moved up 27 points in the day. I'm sorry, 17 points a day. Based on the open around 08, we've moved up about 20 points already. So we hopefully don't see price too much higher and staying there versus coming back within the market maker move, right? But just in case things get a little flirty to the upside where we break this 50% ATR, I mean, what's my gamma? If we go to 30, 35, 40, it's like I want to have a low risk, high reward opportunity that gives me some defense to the upside. Okay. So I know this is a lot, right? There's a lot of stuff going on here. 0 days, so it seems like it's crazy fast. This is not a typical day. I did. It's in the daily profit play alerts. Okay. So what I'd like to see happen today is this. I'd like to see price still stay less than 69.40. The easy trade for me is if price is less than 69.40, okay, and it's greater than 68.50, I still want to make $1.50 on the day. And what I'm willing to do is sacrifice this 50 cents so I can make a net dollar here, and then I have my net 60 cents on the butterfly from double ups this morning, so I'll be up 160 bucks on the day. That to me is the easier day, right? The more difficult day is if my 10 wide daily profit play is threatened, I want to have some defense to help wash away some of that risk. Hopefully neutralize that risk. Hopefully you have zero risk. Because if I lose 850 on a full daily profit play risk, I have up to 950 a profit on that defense trade. So even if I can keep the day within, plus or minus $100, that still feels okay. So I'll repeat that. The easy trade for the day is to stay less than 69.40 and greater than 68.50. That's the easy trade. We stay within there. Guess what? That means the market makers are still efficient despite the run up, which is right around the 10 o'clock handle. Do we have any? Was it news today at 10? I don't think we had any major news today at 10. And the market's not done. Like this happens all the time. Market shoots up in the morning, stalls and falls. Market shoots up and runs to the market maker plus move and then hits a ceiling and falls. This is kind of inefficient. So I'm curious if the market's going to kind of take some of that back by the end of the day. But we'll keep an eye on everything. Okay. So let me set a chart alarm here. Chart alarm at 69.40. My risk comes in around 69.40, 150. So I guess I'll set the chart alarm here and see what I'm taking on real risk. So 69.40, 150 would be threatening my daily profit play level. And then 55 is my pin price. If we get to 69.50, I want to see what the Ironfly is offering for profit. RSP, I think we're breaking new highs in RSP. Yep. I mean, this is an encouraging sign for the S&P 500. What is leading the way today? Oops, not wrong one. So what's our news today? I mean, I don't see anything for high impact today. What's just today's news? Tuesday. Anything this morning? No. What's leading the charge here for the heat map? Is this right? 40. I mean, I would think the market would be advancing a little bit stronger than this to see the market rip up, 20 points out of the open and have it being led by only 47% of stocks. Like that seems a little to me that this strikes me as like, all right, maybe we are still in some thin volume trading. Okay. But the day is not done. And, plus or minus 24 on the day, we opened up around 69.08. 69.08. So as long as price stays below 69.32, then the market makers still do their job. Okay. So if we run right up here to the 50% ATR and we start to fall, then we're still just trading a typical like daily profit play range, which makes my day easy. Okay. But I don't love to see price just ripping up in the morning like that. But we've got the trade in. That's good. We get filled. So we got some action. And now we're looking to play a little bit of defense just in case this thing starts to get a little bit more violent to the upside. Look, what's crazy is our high was 45. Our all-time high was 45. So is the market trying to, go lean and mean for thinner volume and try to get up and poke an all-time high today? I mean, maybe. But we have about 49.8% of stocks moving today. It's a bit of a mix. Like semiconductors I'm seeing are highlighted pretty high. So Nvidia's up, 1.82%. Micron up 5%. Qualcomm up 3%. A lot happened in the semiconductor space. Semiconductor equipment. This is bright green, so everything's over like 3%. And healthcare, wow, big jumps in healthcare today. I mean, it shouldn't be bad. Okay. So while this hangs out, I am going to Just keep an eye on things like this. I mean, truly, this is a pretty inefficient run to the upside. I'm not saying that it can't do that. I mean, this is 0 day trading. It is a very black and white reward to risk. You know you're right. You know you're wrong. I know my line in the sand is just above the 69.40 handle. I know I have some defense up here in the 50s and 55s. So if we hit this 100% ATR today, I'd like to think that my iron fly can offer enough profit that I can take some profit on that trap and offset, maybe the daily profit play. So the goal for the day is let's see if we can just win the day. But jumping right out of here for, 23 points, let's see what, 23, 24 points looks like in the market maker move. Because if we go open, we hit about 25 points up, do we start to fall back down? If that's the case, then I think the market will stay within that range for the day. But if we just keep creeping higher, 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 now I need to see the day close lower. And that's, that's a bit more to ask. Okay, Melissa says health insurance new high premium starts today. Health insurers have bigger profits. Yeah. I mean, that's good. UNH was one of my like favorite trades last year, even though it was pretty scary to watch this health company be down like 60%. I made a couple $1,000 last year on UNH. Healthcare would be good. It'd be nice to see like healthcare transfer into some pharma. I mean, this like I said, this is encouraging. Let me see what Pfizer's doing. Oops. Pfizer spiking up a little bit. That's not healthcare. That's in the healthcare space, but that's pharma. Uh, Eli Lilly. Okay, a lot of volatility, but still looks, overall postured pretty well. I'd like to buy some dips on Eli Lilly. Just taking this is one of many stocks that I talked about taking your April lows and drag it up to your 2025 highs and looking to see if this type of price action offers up a reasonable correction. Previous resistance right in here, that 30% retracement level. I mean, I'd love to see like a 38 to 61% retracement on Eli Lilly. So if this is just noise, here with a little bit of indecision, and this is stock as well. So it's like you might not get the pure efficiency that you're looking for, but if we at least maybe retest $1,000, I wouldn't mind going out here and saying like, hey, I could do like a ratio spread. It's just an expensive stock at this point. Do I want to throw around like 100 shares? Not necessarily. That's a lot of capital. I mean, hell, this is more expensive than trading 100 shares in the S&P, and obviously way more volatile. Okay, MRK. I'm in MRK. I've got some exposure on Merck. Oh yeah. Oh yeah, baby. MRK doing work. I think I put a ratio spread or two on here. MRK. Yep. So I'm about $6,000 on MRK. Not bad. Naked puts. I did a ratio spread naked put combo. Modified ratio. So this is 85, 80, and 75. It's really a ratio spread with an 80 by 75 and an 85 is a naked put. So I'm, and price is trading at 109. I mean, probability to profit remains pretty high at 90. Look at this chart in the bigger picture. It's like if we've just been like kind of troughing out here for a while, breaking this trend line, starting to make higher highs. I looked at this as a potential like break of a neckline here. So if we go low to high and push this move up, that gets us into like 115, 120. But also, since it's a stock, it's like you can't help but look left and see all-time highs around 135. So even if it just becomes an income trade where I just sell puts, I was willing to take ownership back down to this level. I might not get any ownership and price just runs up and I just pull in profits from the premium. And that's okay too. Fat pills profitable. Are they in pills yet? Or are they still doing shots? I mean, if there's like an Ozempic or GLP-1 pill, that's probably going to go over better than people having to inject themselves. Just leave it to America. Find ways to take pills and shoot themselves for fat loss. And the whole it was originally like a diabetic medicine. They're like, no, this is great for weight loss. Let's use it there. NVOS pill. Okay, gotcha. Yeah, I mean, it's good. I mean, like I'm all for it. It's like, um, I think what's sad is like, I do think our food situation is, I don't know, it's as bad as ever. It's like you can be overweight and still be malnourished, and you're consuming thousands of calories a day because our food is garbage. Fast food is absolutely terrible for you. Everybody knows it. They still eat it, but it's also, the convenience and the price. I mean, I go to the gym a few times a week, and the road that I turn off on, there's an In-N-Out burger. And, In-N-Out burger is probably better than most, but like Wendy's, we have a couple fast food places around us. It's like Wendy's is always busy. Um, McDonald's always looks busy. In-N-Out is like literally two rows of cars every day that I see it. Chick-fil-A is always busy. So, I mean, fast food's alive and well. But yeah, it's like, look, if the game is like eat what you want and just take a pill or have a shot to help you out, I mean that's better than going to the gym, I guess. But anyway, to each their own. I feel, I mean, I kind of feel like crap if I'm at least not getting a couple workouts in a week. It's just like mentally, it feels so much better than just, I don't know. I feel sluggish after like a week or so of missing out, but that's me. All right, interesting morning so far. Price shoots up right to the expected move. Opened up around 08. We're trading at 29. So there's a 20 point, 21 point move. We had a high around 31. That's literally 23 points in the day. I acknowledge here that the gamma has filled up a little bit. So here's our 50% ATR. Here's our 100% ATR. I mean, I'd like to see price not necessarily, threaten the 50-55 zone, but if it does, at least I have some profit to show for it. Um, Let me take a look at the VIX because the VIX is getting smashed lower, but perhaps, I mean, is it possible that we have like a 67? I mean, I could put a butterfly spread in today and see if we get filled. Another defense trade on the day, which I don't think would be a terrible thing. Again, it'd be a credit, so if it doesn't fill, it doesn't fill, but it could also help offset some of the risk. So if I went, let's see here, if I did a 60 and 70 and 85, so that right there would give, I'd have to go for a debit. I don't know if this is going to fill today, but I will try it. So 10 wide trap break even would be around 80. Can this give me a dollar credit? All right. So at least I have another defense trade up high if I need it. But hopefully, like I said, we'll just see prices below 69.40 before the day is done. I will say this, second full trading day of the year, it's going to be really annoying to see the market go from 08 to 50 something and just go straight up on the day. Because remember, we have all-time highs at 69.45. Doesn't mean anything, right? We hit all-time highs. The market's like, awesome, all-time highs. It's like that momentum can keep drifting. So there's no reason for the market necessarily for today, like hit 45 and then freaking drop. I want it to, but we have seen, nothing but green for 5, 10, 15, 20, 20. I mean, for 30 plus minutes, it's been all green. And the entire day's range, the entire day's expected move was hit in 20 minutes. So we will see. Hopefully on the day, I get something I can work with here. We shouldn't go higher than 67 based on the open. Based on the open, a VIX dropping, but a high VIX around 15. So this is this morning VIX around 15.22. So let me see. That butterfly is probably not going to fill. So if I look at the 70, 75, I mean, if that trade fills for a dollar, that should be defended. That's above all my strikes, 70 by 75. That gets filled for a dollar. I'll take that trade. and 70, 75. All right. I'm playing defense on the level that I calculated. So let's see what price does for the day. We just hit our top gamma level at 69.30. 50 is starting to light up a little bit as well. 50 is on both my dynamic trend and Tanuki trade. That's right around the 100% ATR. It should be tougher to hit. It should be tougher to stay there. Now, if we, get here and we stall, okay, fine. If we climb a little bit higher, I do want to see prices closing lower at the end of the day. If they don't, then I would expect them to start doing that tomorrow. IWM is cooking. I mean, that's good, I guess. More ratio spreads looking good for Project Options Edge. CVX KTOS down. Yeah, I thought that. I mean, the way those pumped yesterday, that was a pretty easy play to just not get overly excited and chase. I mean, that was the big gap up on Chevron. You had a big gap up on ExxonMobil. Is there a Venezuela ETF? Let's see, we got Brazil. Anything happening in like the Latin America space? Almost up some fresh highs. EWZ is Brazil. Not quite there. I'm looking for like a South America ETF. South Korea. Hmm. All right. Anyway, I have some exposure. So ILF, I'm long. I've had the shares since the lows here around 22. I'm looking left to see if this will continue to run kind of higher. This has been a good value play for me. I bought this thing in the low 20s. Looking to see if this will get back into the high 40s or 50s. So if this structure, holds support, breaks a wedge, any type of like pullback and dip, looks to me like higher highs and higher lows. We clear this high around 40, look left and we're talking 50 plus, we're talking, maybe 60 plus. This is that, non-US exposure, at least having some diversification. South America, Central America, non-US plays. I'm looking for like strong commodity economies, Brazil being one of them, Latin America being another. They have plenty of natural resources. So one way to play it. And then I've got some Africa exposure as well. Africa was up like almost 90% last year. Okay, only thing you can trade Venezuela sovereign bonds. Yeah, I would say that's a no touch. Yeah, I'm not going to chase Venezuela. I mean, I think that if you want some non-US exposure, I mean, honestly, India looks pretty good too. INDA is a pretty good way just to play India. It's consolidated right now, but it is cheap. Look at year to date from last year. Let me go to a 12-month candle. India last year. Interesting, it was flat. I mean, volatility wise, we had a huge candle, 17.5% candle went essentially nowhere. I thought India would perform a little bit better than that. There's probably better ways to trade it, but let me see what else we have. That would be probably one of the easiest ones is the MSCI India. Huh. Let's go weekly chart. I mean, posture wise, it does look pretty encouraging. Going from this low, this high, I mean, if this just look at wave structure. If we are in the midst of like a 3 to 5 wave move, I mean, I think this is a pretty good wave to start from. So we had a low, so low to high, high or low. I mean, I project symmetry. I mean, it just seems to be consolidating here. So even if this is like wave 3, 4, wave 5 should be able to push this thing higher. But I don't know, buy some dips. Nifty, yeah, maybe. That is one thing I've learned about India is like the Nifty 50. So India has a lot of insider ownership in all of their like major companies. Um, this is equal weight. Okay, I mean that's interesting. So NFTY is it looks the exact same. I mean, so INDA is at $54. NFTY is at $58. I mean, if you take a look at this and just take a screenshot of this chart pattern and then go to NIDA, it looks the exact same. So this one's $4 cheaper, but I mean, price action's probably gonna be the same. I would imagine that INDA is not equal weighted, but the insider ownership is actually quite impressive. So it just hopefully speaks to some confidence in like holding on to these things and looking for some type of yield. But yeah, I mean, if I'm trading like non-US, it's like I want liquid ETFs, and that's a big ask because everything in the US is way more liquid. Everything in the US is way more liquid. There's way more volume. I wouldn't do a ton of options on these instruments. It's more like, okay, if I like this one, would I be willing to throw? Let's say I've got a 100K account. Would I throw 2 to 5 grand at it and play the potential like non-US upside trade, right? Maybe, or is that $2 to 5,000 that I'd rather put in gold? Ultimately, it's like gold is where I want to be for a lot of like big picture items. Is we continue to see the S&P rise over time. Buying dips and taking advantage of good buying opportunities is always a good thing, but ultimately gold is where you want to be. You know, something tells me in the next maybe 10, 20 years, like we will have some type of gold standard in some way, shape, or form. We might have some type of big financial market, financial economy reset. The fiat system might really be threatened. It seems like that's the whole narrative for 2025, which was watching gold and silver just rip parabolically. That it's just, I mean, you have more physical delivery now than you've had in like probably the last 30 or 40 years. Um, and I mean, I think the U.S. is making a legitimate play to like hoard more gold and silver. I think they're basically fleecing the Euro banks right now. Deutsche Bank had ended up giving physical delivery to J.P. Morgan and Citigroup over the last 30 to 45 days in like millions of ounces of silver. So crazy stuff. Um, yeah, they were up yesterday on the news. They're kind of like flat today. Can I look at silver? Sure. Let's look at spot price first. So we're back up to $80 on silver. Crazy, right? So silver's running hot. My symmetry move and breakout calculation was 91. Obviously, you can overshoot that. I would say between like 90 and $100 would be a good spot to start looking to take some profit or hopefully protecting some profit. But I mean, I'm thankful that although I did take like a multi-year profit right near this top, I did participate in another dip here. So this is up like 80+% since I started that dip. If you were with me, we did this in class. I did this in Project Options Edge. I've done this in some of my, we did this like just talking alerts. Like I was looking for a pullback towards the 21-day moving average, and we got that crossover. So I was looking at fibs. We pulled back about 30 to 38% here. And anyway, it was a pretty good entry. And it was not like the one trade. It's like I had literally pending orders. And so I got like a fraction of what I wanted, but I had one trade filled here, and then I had pending orders and pending orders. And that did not fill. That did not fill. What I'm doing is I'm shifting these up into these new moving averages. So this is still a cluster that I want to be following. Same thing on gold. I still think that gold is going to hit the 200-day moving average. If silver rips up into fresh highs again, this trade is going to be up 100%. And I mean, if let's say I hit this blue line, which is my targeted measure move, the way I bought into this dip, I mean, that's up 94%. That's crazy, but it would be a great participation trade. So I did this with CEF and PHYS. So CEF is currently up around $7,200. This is literally since participating in October. So CEF is up $7,200. GLD is all option trades, so that needs more time. It's going to be a couple $1,000. PHYS is another share that I participated in. This is up $3,000, and SLV is currently up 18, almost $19,000. So like I do have some exposure, but my gosh, like what a fast action silver run. And I mean, look, it's exciting. If you're in silver, you're certainly not hating this trade. All I'm saying is just buckle up for some inevitable volatility. What's it trading for right now, Aggie? If you want to look at like the 60, I mean, what's it trading for right now? If you can't get 950, it's like you can still work that thing for like maybe a 910, 920. Let's see. So if you couldn't get the 55, you can go 60. So try 60 by 70 by 50. There's 955 on the. I mean, you go up five points. If you go down to my strikes, then you're getting like a 910. So, and if you want to modify it, risk less, put this thing up to 960, and there's 10 wide. So you can get it for 950 to 955, risk about 50 to 40, like 45 to 50 cents. Price, obviously, if it's going to push towards 50 or 55 or 60, it's like then it gets you into that profit trap. So that would be, I would consider just modifying that. Yeah, I would just do like the 60. Let me see what this looks like. If I did this at 15 wide, I'm risking $1.30. It's like that washes the daily profit play. So I don't want to pay more than like $1. I don't want to pay more than $1 for it. So if you can get the 55 by 65 by 45, if you can get it for $9 or higher credit, I would still take the trade. 905, 910 is fine. You're sacrificing a little bit into that $1.50 of the daily profit play, but at least if you wash, if the trade is below 69.40, you wash the risk here and you still make about 40 to 50 bucks on the overall trade. But don't take it for like an 890 or 875 credit. Like get $9. Right now I'm showing 925, 930. So I would still be willing to take the trade at like 920, 930. Okay, got it for 910. All right, that's fair. What was that 220 trading for right now? Curious if that butterfly is doing better. Look at this crap. We're up to the top end of the butterfly spread. It's already down to $1.85. I mean, that's a quick win. I'm glad I took that double up, even though that was in and out in like 10 minutes. And I don't like that, by the way. It's like I'm running services here. Like I don't want traders to be like, man, that trade was so fast I couldn't even get in out. I get it, but that's what happens. Like the good thing on trading like 0 and 1 day is we can do this stuff a lot. So never chase a trade. Like don't intentionally just take a trade because I posted it and you're getting like a terrible fill compared to what I got. So there will be plenty of opportunities, So today's going to be an interesting day as this all kind of unfolds. It's like I'm just hoping that price stays below 69.40. That makes my life a lot easier. So if we hit the expected move, which we have, opening up around 08, high around 34, that's a 26-point move. That's above the expected move. Hopefully we do not go higher than that. If we do, I want a profit trap, and I have one up here that's worth, 950 bucks. But the easy trade would be we hang out here on the 50% ATR and we stay there for the day, or we drop back down to neutralize this trade. Then I sacrifice 50 cents on the iron fly. I get a full $1.50 on my daily profit play. I still net, about $100 on the day plus my double up for 60 bucks. Silver, set a chart alarm, see if we break some highs. Measure move is 91. And might as well throw in a chart alarm at 100 just for a big milestone. So that's spot price. Somebody want to look at SLV specifically. I mean, we're up to fresh highs on SLV. So this is where the demand for paper trading and leverage in the paper trading is exceeding probably the physical availability on the future side. So I mean SLV is running hot, and I mean that's not a bad thing. Like it's exciting. I'm just telling you, like these moving averages will get hit. Okay, look at gold. I mean, gold's not to fresh highs yet. Spot price gold is not to fresh highs yet. This market, I do think in 2026 will hit this 200-day moving average because we will be going into. I mean, we're already at like 580 bars. We're going to be at 600 plus bars in the next month. So once we hit 600 bars, it's like last time we hit 600. This is the longest stretch we had in gold, which was like 2009 and 2011. We hit 600 bars and we fell 20%. So some type of interesting catalyst for 2026 could be gold and silver with a lot of volatility, whether it's volatility upside or downside. Okay, look, gold and silver. Here's how I could see like a top in silver and in a bottom in gold. Let's use the ratio. I want you to write this number down or keep an eye on this in your charts. XAU versus XAG. Okay, if this hits 45 or lower, it is time to start looking at gold buys. Like silver would be getting so look, it can overshoot, but historically speaking, when the gold silver ratios hit 40, it is a time to be looking at outperformance in gold. Larry says I have 75 ounces of silver, more like 300. Yeah. I mean, look, man, it's such an interesting like culture around like owning gold, owning silver, the physical assets. There look, I'll have you listen to it. I mean, the guy is he's a little preachy because he's been doing it for 30 years. But the company is Miles Frank. Let me see if I can just find um let me find the session. So Adam Taggart's the host. Just go to youtube.com. My computer is slow today. All right, let's go to Thoughtful Money. All right, so this is the channel. And he's got an interesting mix. I listen to this podcast. Usually my gym sessions are listening to 3-4 financial podcasts on 1.5 speed and just soaking up as much content as I can. This is the one that I'm talking about. Here's the Silver Boom over. This is Andy Scheckman. He's from Miles Franklin, and they do a lot of gold and silver physical trading, storing. Um, they were offering some of these followers like $1 below spot price buying opportunities in the last like 60 days. Look, I think this is probably as good as business has ever been for these silver plays. But what I would say is don't go to a freaking pawn shop and try to sell your silver. Like there are legitimate companies out there that they have their like basic fees and it's a couple dollars here and there off of the spot price. But I mean, it's the same thing as like paying a spread when you're trading in a broker platform. So anyway, if you want to check this session out, it was a pretty interesting one. Now keep in mind, like he's very bullish on gold and silver, but that feeds into the narrative of like, okay, so gold and silver. Look, I get the debasement trade. I get the need. I get the physical delivery. I get that there's net longs and some of these major whales like J.P. Morgan and Citi being net long silver. I mean, these are all good tailwinds for gold and silver to continue to go higher. I think it has to be a portfolio allocation, but just be careful on the speculation. Be careful on the paper trading side because there's going to be leverage into the system. I think that's where the mania is. So there's also in the background, silver going higher like it has been, gold going higher like it has been, is a complete threat to the fiat system. And I don't know if it's enough to, blow up the fiat system. I don't think that it is. But also, this is not just like US. This is like there's a lot of stuff going on non-US where, countries are like, look, I'm just going to put my money in precious metals. And when you have like central banks and private equity and people want it on their balance sheet, I think that's where a lot of this boom is coming from. So anyway, form an opinion. This guy's been in a couple of times. Miles Franklin. I mean, if anybody does have physical gold and silver, that's at least a reputable company that I could say would, at least be open to a conversation of if you wanted to store, if you wanted to exchange, if you wanted to take some profit. Because the other side of this is you don't touch your silver and your gold. You keep the physical side, and then you basically just hedge the paper side, you know, and then you're essentially trading like a futures, futures trader. So, and this is what they do. It's like from the comic side, like if they have 3 million in new inflows, then they will net out and hedge 3 million. It's like they want to keep it kind of delta neutral, but they're like a physical delivery exchange. Okay. So anyway, if you want to check that one out, it's a pretty good session. I listened to this the other night. It's a long one. It's like an hour, but check it out if you're interested. So Miles Franklin, thoughtful money. But he's talking some pretty big levels. This is the guy that I've said this before. This guy that said that look out, 10, 15, 20 years, silver will be called unobtainium and gold will be called unaffordium. So if they continue to go up in price and value, um, it's like everyone's going to want them. They're going to be harder and harder to get. And also, silver has made the leap into like the poor man's gold, into like a strategic industrial metal that is now like a part of the whole AI boom and the whole AI build out. I mean, silver is a big portion of that. So is aluminum. So is copper. Like all these things are taking off. So I think that does make for a really interesting play. Would I be 100% in silver? F no. Would I be, 50-50 in gold and silver? No. There's still markets to play to me. But as a, portfolio manager, would I like to allocate 10 to 20% towards gold and silver? Sure. Right? With protection, with a trade, like it is a trade to me. And, these last couple of years, like Bitcoin has become the same thing. Like it is a trade to me. So anyway, check it out. Pick up silver at the dentist. Yeah, maybe. All right, Aussie New Zealand. Oh, shit, we would hit highs on Aussie New Zealand. All right, well, it's testing my stop loss. That piece of crap. Swiss yen falling. That's good. Got a little trade on that one. All right, what's our currency strike doing? Anything else we want to touch on today? I'm still happy to go another 20 minutes or so. Swiss is getting weaker. Love that. Still have some carry trades running. Dollar stronger, Aussie stronger. Not a ton of volatility in the currency market today. We are at least showing some signs of rejection out that market maker move. 08 to about 34, almost 35. What is that? 27 points. So we hit about that move. Hopefully it stays below 35 in the day. If we settle back in, great. We'll still net the day out and win, hopefully. But I'll keep an eye on things. I did want to touch on, I can do a little sneak peek here. So just to recap, so we're in some trades in daily profit play. I'll continue to monitor. Waterfall income. We had a session yesterday. We have 3 pending orders. If I have anybody that is interested in waterfall income, let me do some track record stuff here. So I'm going to summarize this in Telegram, but I mean, I know I have a lot of services. Daily profit play, we are winning 89.1% of our trades. So I'm just going to throw out here. I'm going to do a little bragging for how we've done the last year plus. 89% win rate, and we trade this thing every day. I love daily profit play. Waterfall income, our live trades have been winning 94% win rate. Newsbreakers will start to heat back up here once we kick off with earnings season. Newsbreakers, we are winning 71% of our trades. Typically, those winners are bigger, so that's a good thing. Is you have slightly higher winners and a bigger win rate, so 71% winners. Double up is my lowest win rate, but it actually has my biggest model portfolio gain because of their high reward and low risk style of double ups. I mean, this portfolio is up $80,000, $79,069. We have a 58.6% win rate. I'll add another trade in today to bump that up, but still, it's a 59% win rate. But the winners on average are about 25 to 30% larger. So even with winners and losers, we're taking in like a surplus in profit. So this is, and I've said this in the service, like this is my lowest win rate service, but it is the one that has the highest reward to risk setup every single time. Okay. And then pinch point. Pinch point is winning 84%. Pinch point is 84.3% win rate. Engineered options is brand new. This is the course that I'll be offering on Sunday. Well, you'll see webinars on this all next week. So it could be here in Daily Profit Play. It could be some on-demand webinars. It could be live with Lance and I. This is going to be new service. I'm excited about this one for new service. And it's officially starting January 11th. This is around a 70% historic win rate. And the best part is this is a 1-to-1 or better. So if I'm risking 50 cents, I'm making 50 cents. I'm risking $250, I'm making $250. So there's a trade-off, but like I have setups in the service where I'll teach you this over the next couple of weeks in class. But the goal is I want my winners to be big enough that if we win, let's say we win, 60% of our trades, 55% of our trades, 65, 70% of our trades, that the ability to win, 60 to 70% of your trades and have a 1-to-1, that is a very easy mathematical service to make money, right? So there's a way to participate in the market each and every week with good postured moves and good technicals. And there's a way to kind of also have a defense trade every single week. I'm using this service primarily for weekly and monthly options, weekly and monthly income options. Okay. But it's to me, this is all about the reward to risk because I take plenty of backwards reward to risk. Daily Profit Play, it is higher risk than reward every single day. Waterfall income, every swing trade is slightly higher reward or slightly higher risk and reward. So I'm not going to keep running services that put me at that like deficit where losses are a little bit bigger. It takes, 5, 6, 7 wins to get back. So I want something that's like, look, I'll sacrifice a bit of the win rate in order to go after what's easy money as far as like the math of I win, I lose, I win, I lose, I win, I lose. And just it adds up and it's a lot easier to carve out those wins where it's like if I lose a day or I lose a week, I win another week, I net profit. Like that's good, right? Okay. Crash insurance, that is just pure hedging only. And it's, monster reward and low risk. This one is not about winning. I want to win, obviously, when I need it, but the goal is like it's there for defense. These are massively asymmetric. So the trade that I took just this last week on, you could trade on SPX or you can trade on ES for futures or SPX for a hedge. I had up to a 34-to-1 reward to risk on a butterfly spread. So, the idea is I'm not going to make 34-to-1 reward to risk. But even if that offers me 5-to-1 or better, like 5-to-1 is a great hedge. 10-to-1 is a fantastic hedge, right? So if I need it, it's there. It helps offset some of the pain. For example, if I were to make, I think I took the trade, it cost me $560. If I made, let's say, $5,000 on the profit, which could pay up to like 25K, if I make $5,000 in profit when I'm risking $500, that is like lowering the cost basis on S&P ownership by 50 points. 50 points. So the S&P is at 690. That's giving it like room to drop to 640 and you're not taking on any risk, right? Like that's a good thing. So if we need it, it's there and it's hopefully going to help offset some of the drawdowns. But I think last year we had 2 or 3 winners out of maybe 6 trades. I don't intend to win, more than probably 25% of my hedge trades. And moving forward, it's like I also think about this, and this can be like a separate class or something. But I think about it this way: if I'm concerned that the market is going to fall, one way I could also have a low cost insurance is set a 5% lower credit spread or debit spread. Right? If I did a credit spread, I can pull the credit in up front and collect a high amount of premium. The put side, you're typically going to get like a slightly asymmetric put side anyway. So if I did like a 5%, a 10%, realistically, it's like if we're going to have a bear market, then prices will finish lower than these strikes. Does that make sense? Like if we're sitting here at 6,900 and the market's going to finish 5 and 10% lower for the year, if I just put out a 12-month bear call spread that's 5% lower than current price, that's going to cost me maybe $1 to make five. And then this trade might cost me 50 cents to make 10 or five. So either way, it's like they should offer, 5 to 1 or 10 to 1. And if they close beyond that, that's another way to kind of get a nice cheap hedge. And you can do the same thing for, 15% and even 20%. But obviously, for the market to be down 15 or 20% and stay there, that is more challenging. Having the market be down 5 or 10% for the year is actually very doable in a corrective year. But having the market go down 15, 20% and stay down 15, 20% is a little bit more difficult, right? So like there's all sorts of ways you can play this, but the point is these are not trades that I take to plan on making a ton of profit. I want high reward, but I don't plan on winning these trades very often. If I can win 25% of my hedges, but my average hedge is 5 to 1 or 10 to 1 or 20 to 1, yeah, I could risk very little to make a lot of money when it eventually pays off. Does that make sense? All right. Project options edge. I just did the math here. 97% win rate. We were 61-2 last year for project options edge. This was a purely discretionary service. So anybody that is not a all access Diamond Club member, but you want like additional bonus trades, that was one thing that I offered last year, and we started trading in like late January, and had 63 total trades. 61 of them were winners. We have another. There's still trades running for Project Options Edge, like another probably 10, 15 trades open right now that we're looking at like another $4,500 in profit over the next like 30 to 60 days. So we'll continue to keep the win rate nice and high. Anyway, this is trading. I mean, I'm going to do what I need to do to make money. As far as like different ways to trade, it's like none of these services really overlap at all. But if you have some foundational education, practical options, just learn some basic option strategies. This full course, I'll make a highlight here for the practical options full course. So my full course is 13 option strategies. Okay. So this is a pretty good way to say when I'm talking daily profit play and I'm talking about a bull put spread or a bear call spread, or I'm talking about a debit spread or credit spread, I'm talking about a butterfly trap or an iron fly or all these different strategies. I touch on these, I highlight these, I teach these and practical options. So that just gets us well equipped for the vocabulary, gets us well equipped for the strategy type, understanding like what the risk graph looks like, what we're trying to accomplish. Because I keep saying this with options, if you know what you want to do, in expressing your trade in the markets, you can trade it with options. And the best part about trading options is you know where you're right, you know where you're wrong, you know what your risk is, you know what your reward is. If you're trading defined risk, all we are trading is price versus time and volatility. And there are strategies that take advantage of any one of those facets. If I trade price, then I benefit from price direction. If I'm bullish, I trade bullish. If I'm bearish, I trade bearish. There are strategies that are directionally neutral, and you benefit from time. If time passes and prices don't move and they stay range bound, we make money doing that, right? There are strategies that trade volatility. Low volatility, it's cheap to hedge, and if we have a volatility spike, that's another way to kind of offset some wild and crazy stuff in the markets, and also have opportunities elsewhere. I know a fund that has anywhere between 5 and 10% of their total book in long volatility. You know what that win rate is? Like freaking nothing. Like they never win. But when they need it and the VIX goes to 60, it's like, yeah, there's some upside. So a 5% exposure that maybe nets them 5 or 10% gains. I'm like, yeah, I get it. Like long vol's a good play. But is the VIX ever going to go to 100? Like, I don't know. Usually no, but it's like we've had plenty of flare-ups on the VIX where it goes from 40 to 50 to 60. And obviously the worst of times it's gone up to 80. So long vol's not a bad thing, but it is expensive, and it's not for everybody. Like it is a throwaway type trade, but it is a decent thing to have as far as like hedging. But I just don't love that you have to do it either all the time and kind of keep like a small piece running all the time, or you like literally for like a non-correlated book, it's like having literally like 5 or 10% of your portfolio is like long volatility. That's a lot of exposure because like you could literally sacrifice it. I don't mind sacrificing, anywhere between 2.5% and 5% a year, which does seem like a lot. But if that 2.5 to 5% can give me, let's say 2.5 to 5% of upside and my entire portfolio, it's like that hedge is worth it, right? Because the payoff would be like if I take a, let's say, a 5% risk, but I get 100% gain out of that, then guess what? I just, that 5% is now worth 5% of my total portfolio. So what I like even more is when I can get, 5 to 1 or 10 to 1, then that 1% risk pays me 5%. Like that helps. You just don't need to, you don't need this to pay very often. So anyway, this is kind of the overall summary. It's like, look, there's a lot of winners. I said this from day one when I came in. I told the company this. I'm like, look, my track record is what I really care the most about. I mean, I've been managing money now for almost 15 years, and I've been trading for a long time. I've been trading for 20 plus years. But coming in to run these services, like, look, I want to win all of my trades. I know that that's not going to happen because I know this is trading and it's not perfect, but I do know how to make money. I do know how to trade, and I do know how to do this without being overly committed and overly exposed to the market. There will be plenty of opportunities. Okay. Plenty of opportunities to take advantage of these markets. I will say this, at these valuations, I know that the market can go higher. Okay. I know the market can go higher. It probably will drift higher, but a better opportunity when and if it presents itself would be the market offers us another 5 or 10 or 15 or 20% correction, and we start dabbling in those dips to start positioning for longs. Okay. Look, I will tell you exactly what I want to do. If the market gives us a 10, 15% correction this year, I'm going to start participating in that dip to see if we can get back to all-time highs. And I will also be looking to see where's the VIX, how much premium can I sell, and what strike prices can I go after? Because if I can sell puts, going back kind of first full circle to the put conversation this morning, if I can sell puts out, 40% lower than all-time highs, 50% lower than all-time highs, I am, again, it's not a guarantee that price doesn't come there, but I am pretty well defended and padded for if I took ownership of the S&P at 50% lower than all-time highs, that is a 100% upside to get back to all-time highs, which I believe it will get there. It's a matter of time, but I think if we have a 50% correction, maybe the markets do nothing from the time we peaked to the time we troughed to the time we get back to all-time highs. Maybe that is another lost decade in trading. But I'll ask you this. Would you have liked to buy the dips in 2001, 2002 and ride those highs back up to 2007, 2008 before we crashed again? I mean, who wouldn't? Who wouldn't want to be buying at discounts and getting, massive upside potential? Because when we're down 56%, we have over 100% upside to get back to those highs. And we did that within like a 5 or 6 year stretch. From 2001's bottom or 2002's bottom to 2007's high, you had a 100% gain in your portfolio, right? Again, that's bottom to top. But you had an ability to get back and carve back with participating in those corrections. Same thing is true in 2008. The market was down 56% from peak to trough. Well, from 2008, 2009's low all the way to now, the market has gone up like 3x, right? So the upside is incredible on top of just getting back to those highs. So having cash available will get you the generational wealth and the type of gains that I think everyone would love to have. But it's crazy that you can be so profitable from a terrible time in the market. But that's what the wealthiest people have done for the last century, is when the market's down and you have assets, you buy more assets. The markets are a great way to participate in this game. Okay. So the weird part is it highly manipulated now? Is it free market? It's highly manipulated. The Fed is influential. Our president is influential. The U.S. market is so like financialized where it's like our economy, even though we say that the stock market is not the U.S. economy, it is very much correlated. And so either the stock market or the U.S. economy is like, flinching and something breaks and all of a sudden it's like, okay, we slipped into recession. I'm just saying if we have opportunities to buy, discounts and buy lower lows and buy dips, to me, that is a better opportunity than, trying to grind out this market at all-time highs. So I'm going to trade 2026 this way. I will be cautiously optimistic and I will keep the trade size quite small because I want to keep plenty of cash available in the event that we have, maybe I don't know, for whatever reason, like put in, insert the line item that I don't even know what the headline is, but put in the headline that says this is why the market's down 10%. Okay, well, I'm going to try to buy that 10% dip or participate at that 10% dip. If the market's down 20%, I will do the same thing. But between a 10, 20, 30, 40, 50% correction, I will be adding participation levels. And I will say this, my ultimate bottom, and this is like coming from macro analyst perspectives. Does anybody know where the reversion is right now? Like if we're going to revert to the mean in the S&P 500, do you want to know what that percentage is? Take a guess. What percentage from these highs is our current like multi-year reversion to the mean? What gets us back to like a 14, 15 times earnings? Does anybody know? Way more, Ken. Way more. Ken typed in 15%. 70%. 70% from these highs. Okay. So it's going to be extremely painful to have that happen. And I'm not saying it's going to happen, but I'm saying if and when it does happen, my gosh, do I want to have some dry powder ready to scoop up at 50 and 55 and 60 and 65 and 70. And I will wait that market out. It'll take time. It'll be ugly. But man, if you can survive that and you're not a casualty of just a bloodbath in the downside, the amount of upside gains you can come out of it. So if my portfolio is down 70%, what does it take to get back to break even? I know that at 50%, you're looking at like 100% upside. Let me see what this chart shows. Here you go. Do the math. So if we're down, this is insane. Okay, so not only can you double your money, okay, but look, I'm not saying this is going to. My cost basis is not going to be 70% lower. I can promise you that my cost base is probably like 35% lower, 40% lower. But I sell a premium, I use options, I take advantage, I hedge, I grind through it. But if I can survive like 30 to 40 to 50% drawdowns, and then you'll still have some liquidity to add at 60 to 7% pullbacks. I mean, I just want you to look at the upside. If you're starting to dabble at 30% discounts, you got 40+% upside. Discounts. Okay. Even if the average is, let's say that between 30 and 70. So let's say at every 10%, 30 and 40 and 50 and 60 and 70, that would be over 5, right? So my net discount would be around 50%. So if I net it out, let's say I put in, more capital because I've got some dry powder and some margin on the sideline. So I put in some participation around the 50%. I mean, I'm pretty confident. Like right now, I've got about a $5.3 million portfolio that I'm managing. I'm pretty confident that if I had the opportunity, I could turn 5.3 million into probably close to 10. Like that would be my bigger picture outlook. It's like it might take 3 years, it might take 5 years, but to literally double my portfolio in maybe a 3 to 5 year window, maybe a 10-year window, that's still a hell of a run. But I want to do better than that. Like I'm not happy at 5% a year, 8% a year. I'm happy at double digits, but it is a lot of work to do that. So anyway, that's just my little PSA for the day. Because look, we're sitting at these crazy high valuations. I do think the U.S. economy is good. It's resilient, but it is fragile in places that we all know it. Like the labor market right now there's going to be massive disruption from AI. If you think about the dot-com bubble, companies got absolutely crushed. Okay. You could have picked Amazon and Google, and you could have picked these winners, Apple, right? You could have had these companies in your portfolio. It didn't save you from like the 70, 80, 90% correction that happened during the dot-com bubble. Individual stocks were absolutely smoked. Okay. But what came out of that was the internet, which did change our world. AI is being looked at as the same thing. There will be massive winners and atrocious losers. But what will come out of this is hopefully a new technological innovation where maybe people are more productive, maybe companies are more profitable, and AI forever changes like what we do. on a daily basis, or what our jobs look. I don't know. Whether it's good or bad, whether it's disruptive, it's going to be disruptive. We all know it. It's already starting to feel disruptive. But out of this will probably be something where at the end of the day, the financial markets are going to try to find a way to go higher. Right? Rule of 7 and 7. I know the rule of 72. Um, Rule 72 is you take your annualized gain. So if I made 10% a year, so 72 divided by 10, I would double my money in 7.2 years. So, I mean, what's crazy is since 2020, the market's been averaging about 16% a year. So if you've been in the market since COVID, I mean, essentially you could have doubled your money in the last 4 or 5 years. That's with what, 20+% drawdowns in the market and still doubling your money over that period. Okay, daily profit play. Let's see. All right, things are looking a lot better. We're getting back to neutral here. Daily profit play is probably showing some profit now. So it looks like for the day, here's going to be the net result. Let me see if I can carve out a small loss. I'm only risking like $50 on that iron fly, but let me see if that's a partial loss right now. That's my iron fly. Okay, I'm going to take this so I just closed out for $100. I forgot that I set that take profit at 50 cents. So 40, 50, 50, 40, that was closed out for a 50-cent debit. So that's $100. I'm only down $30 on the iron fly. I'm just going to take the small loss. So close this down for, let's go 970 to 975. So save me a couple bucks. 975, come on. 980. Let's do the math on the day. 985. Come on, you piece of crap. Save me 10 cents, I guess. All right, filled at 990. So here's the math on the day. Daily profit play up $100. Double ups up $60, and I just lost 990, so 40 cents. So I'm up 120 on the day. I'm done for the day. Okay, so here is the math. I'm going to type this daily profit play. All right, DPP update. Everything's looking great. So price coming back and cooperating. Today's DPP entry $1.50. Now showing 50 cents debit or lower to protect. I'm closing and taking the profit. Summary is $1.50. So DPP entry 150 credit, close 50 cents debit for a $100 winner. The iron fly defense 950 credit was entry and closed 990 debit for a $40 loss. And then the double up butterfly was a $1.60 debit, closed 220 credit for $60 winner. So net profit on the day, so 100 plus 60 minus 40, 120 on the day. All right, so I'm out. And that lets me cancel. I'll still keep this the top trades running, like this bear call spread, butterfly, The put fly is out to the 9th. That's out this week. Okay, those are fine. So, these top trades I'll still leave, but we probably don't need them. They'll probably not get filled. So I'll just let the broker remove them. But where are we for the day? Right? Big move up, big move down. Was that a surprise? No. Why? Because market makers do this crap every single day. So now if I have any risk, it's going to be price has to come all the way up to like 60 or 70. And I don't think it's going to do that, but we did calculate like the VIX high of the day. So I think where we have it is worth like, maybe throwing a trade on. But that's it. Like winner of the day, it's 11:06. That's a lot of action here in 90 minutes of trading, but it's nice to walk away a winner. Good, Matt. Matt says got filled on both daily profit play trades, sweat out for a bit. Nice profitable trade. Yeah, I mean, risking it's like risking both. I mean, if you're risking like what? I was risking 9 or 850 on one and 400 on the other, right? So I mean, you're risking like $1,400 on the day. It's like that's a little much. If that's outside your wheelhouse of like percentages, it's like you shouldn't have to risk that much. I would have been much happier. And obviously wouldn't have had to go immediately to defense if I just took the 5 wide. If I did the 5 wide and I'm taking it in for $1, then I wouldn't have played the defense trade so aggressively. But going $1.50, it's like, all right, let's make sure that an 850 risk is going to be washed a little bit, at least make an effort. But net on the day, I'm happy. Okay. All right. Anything else for the day? I know there's a lot. It was fun. It was just a lot. A lot of quick price action, but that's what happens in a 0-day environment. So quick spot check. We are kind of back to flat on the day. Market had a small gap up. We're giving some of it back. We're pretty much back to neutral now. Positive gamma still sits around 6,900. So maybe the day is up and down and then back up. I mean, that wouldn't surprise me at all. If we're up for the day, down for the day, then the market goes up for the day and we just kind of settle in here. It's like that could be the day's range. And then we, have like major news coming tomorrow morning. We have ADP non-farm in the morning. We have some services PMI in the morning. And we'll see what the day unfolds and gives us. So, all right. Hopefully that's a lot of stuff that we've talked about. Any questions on the services here? Just want to celebrate some win rates. We've had a great year. I'm looking at, obviously having a good year in 2026. But to me, 2026 is all about trade size. I will participate as much as possible. I'm going to tighten up the risk quite a bit and be very opportunistic. When I want to increase trade size in something like waterfall income or something like my engineered options, I mean, those are trades like this is very flexible. This one is very flexible with also good reward to risk. Pinch point, we've got trades already running. Double ups, I look for opportunities during the week like we saw today. But these are fast. Like this is 0-day expirations. This is 0 to 1-day expirations. This is 7-day expirations or out to like 30-day expirations. This could be, up to 3 months, 30 days, 60 days, 90 days, 100 and whatever. I mean, I've taken, we have a couple trades in that are out to like June or July of this year and even out to January of next year. Like this is a big picture portfolio management service is Project Options Edge. But if anybody's looking for education on just better understanding trade strategies, better understanding if you want to be, bullish or bearish or neutral, Practical Options as a VIP member in any of these services. If you're a lifetime member of these services, you have a Practical Options video course and strategy guide inside your lifetime classroom. Okay. Zach, yeah, that's a call and put option volume sentiment. If you have dynamic trend and you'd like that, send me an email. Chris Pulver pub at gmail.com. So that's just giving us a reading of, whether or not the bull side calls, the bear side puts, and obviously when we're in, this is what I like to read it with. If the market is in positive gamma and this number is greater, let's say the top number here is greater by more than 20%, then the bias is the market is looking to be bullish on the day. Okay. Anytime this is less than 20%, then it's usually going to be like a battle type day where the market's going to be like choppy and maybe ups and downs. So there are some days where it starts out and it's like 75% to 0. Well, the bulls are looking to go after some gamma to the upside. You should, Larry. Yeah. If you don't, send me an email. I'll make sure they can add it. They should be able to add it for you. Yep. So if anybody wants to get their hands on this tool, I've got a pretty good package. This team built me an exclusive like 0 DT package that's pretty nice. I mean, it's $945 for the year. But I use this stuff every single day. And like, I mean, you saw it today. I would not have made it a trade today without it, right? Did I think we could hit 25 and 30 today? Yes. That was the market maker move plus the 50% ATR. So I took the trade, turned it into a couple bucks. That's the plan. But if I didn't have this visual, like I would never take that trade. Okay. All right. Good stuff. Yep. I agree, Zach. It is. It's great. And the team did an awesome job. This, when I first saw this software like 6 years ago, I'm like, this is probably the best option software I've seen. And when they started to get more and more entrenched in zero DTE, it was definitely one of the best tools I've seen 0 day. And obviously I've seen some competitors, like I'm an affiliate and ambassador for Tanuki Trade. They do a great job. Like this is real time gamma, but I also use Tanuki Trade for other filters and generate some trade ideas. Like here's an example. If I just look at what's having positive skew right now or positive squeeze, it's like I have some tickers. I mean, this is nice. I take 200 symbols and I have 1, 2, 3, 4, 5, 6, 7, 8. So of 200 symbols, I have 8 that are actionable. And these all have like really good gamma profiles, which means if I'm long on these or structuring trades to have a long bias, these are fantastic trades. If I want to go out 30 days on an option, like these are pretty good trades. Be long in Bank of America with some type of credit spread, some type of naked put, some type of ratio spread. Prices are going up with gamma squeezes. Like all this is good. So anyway, a lot of ideas that I can generate here. My live feed, obviously, and I can look out multiple days, which helps me. So if I want to see, if everyone's talking about, hey, what's Friday look like, Chris? Well, then I'll go, today's Tuesday, Wednesday, Thursday, Friday the 9th. We go out and see like where the big gamma levels are. Well, it's not really negative gamma right now. It is still positive gamma. And right now we're trading at 69.13 with some of the higher strikes at all-time highs. 69.50, 69.75, even 7,000. Those flows are still out there for right now with the positive gamma environment. Right? So these tools help me a lot. And look, I wish I was good enough at coding to build this crap myself, but I'm not. I know Kane built something very great with his his Gamma Pro. Kane and I talked a lot, like months, and I'm just like, man, I'd love to build that, but I'm not gonna code all the crap myself and whatever. It's like I know that he had already like the spreadsheets, the Polygon feeds. He had everything already feeding into a spreadsheet. He was doing it manually, and then he just ended up building it for whatever it cost him to build it. But I've been friendly enough with people in the industry that it's like, look, I like what you do. I don't mind sharing your tools. So that's helped me for a lot of years. Anyway, good stuff. All right, I'll let you go for today. Busy session. I get it. Come back and do it again tomorrow. Waterfall income class will be tomorrow at 1 p.m. Eastern time. Engineered options, excited to get this thing off and launching next week and going live. Official trade alerts are coming out next week on Monday. In fact, one of the Sunday night webinar, I might actually sprinkle in the levels, but we're ready to trade Monday for that. That class will have, master classes, plenty of touch points, education video, strategy guide, and a Telegram channel for members. So it should be, very easy to follow, very easy to trade. I'm primarily focusing on exclusively SPX and XSP to make sure that we can have like everything cash settled, good tax benefits, and cost-effective options. Cool. All right, good stuff. Okay, everybody. Thanks for being with me today. Good stuff. Markets, fortunately, didn't just go, haywire to the upside. It's like they were inefficient. They became efficient. That's a typical day. We just have to ride it out a little bit, which is also why I wasn't sweating the trade because our high was 35. Yes, we had risk at 40, but we had like an 8 delta when I took the trade this morning. So I'm like, all right, 8 delta is a little bit difficult to kind of test and also break for the day. But we had some defense just in case we needed it, but it didn't matter. We still won the day. All right. Appreciate it. Thanks, everybody. Thanks, Dave. Thanks, Zach. Larry, always good to see you, man. Donna, Matt, everyone else is peacing out. I'll see you later. Bye.
right, folks, that's it. We'll see you guys on the next one. Yeah, about to go host Market Masters. So if you're feeling looking for something to do, that's where I'm going to be with Jeffrey. So we'll see you guys. Take it easy, Donna. Thanks so much for being here every day. We'll see you next time. Chris is getting ready to do his new launch. So there you go. The more you know.